It's Friday, the last day of March, the 31st. The first quarter has flown by. I guess after you cross a certain age, everything seems to fly by.
You begin to reflect how your grandfather said that things go by so fast.
The granddad was right. He was not exaggerating. It is flying by.
And tomorrow's April 1st, so don't get fooled.
Don't get fooled.
Don't get tricked.
Yes, don't answer any spam calls.
There you go. Yeah. Well, we've had another week. We finished out a quarter. Christy, when we travel, if we travel too long, she begins to get a little itchy-scratchy. That's what she tells me. That's her way of saying.
Wiggling in her seat.
Yeah, that's the way what she says to me. How your kids used to say, "Are we there yet?" You know, when she's saying she's itchy-scratchy, she wants to know, "Are we there yet?" Many of you correctly and understandably are getting a little itchy-scratchy. And what I mean by that is
first quarter results.
First quarter results. The S&P, you said
up,
this
up
morning.
5.5%, and then the NASDAQ was up close to 15% just in the first quarter. So, but put that in context. The markets were down so big last year that they're recovering some. And then we're getting that question, and it's an understandable one, and it is the itchy-scratchy kind of question. Is it time to get back into the market?
And we're contemplating it. We look at that virtually every day and every week we talk about it, and we have positioned the portfolios to do that. We are, quite frankly, if we're going to err, we're going to err on the side of trying to be a little more protective for you because we know your concern
because really what's changed in the last 3 to 4 months? Not much.
So from our perspective, we have collecting the data, and you have as much data on one hand that says, okay, maybe now is the time to begin to get in the market. That pile's shrinking a little bit. You got another pile here as equal that would give you reason to pause and not get into it. And Gibb pointed out something good in an interview we were in the other day. Let's just hit a pause button for this second quarter. And the second quarter is important to us because
of earnings. And so we'll be able to reflect back over this first quarter what earnings look like year over year, quarter over quarter, and we're expecting to see results that are not too favorable to most of the S&P 500. And if that's the case, we probably will see some weighting on the negative side and to the markets, and we're just going to sit tight and see if that does occur.
And if we see the weighting to the negative side on the market, then that would be a buy-in opportunity for us. We could enter into it even cheaper than we would be entering into it at this point in time. So again, as I said, we just had money last week that we renewed. The renewal rate on treasuries are still in above the 4 or 5, pushing close to the 5% for a 3-month basis. We've looked at money maturing. We have money maturing in June, several points in June, money maturing in July. We have very little, if almost no money on a long-term basis. So we have exposure that the banking system has. We're short-term, and the equities that we own in your portfolio are high-quality dividend-paying positions.
That's right.
So we're going to hit that pause, watch for the second quarter. We understand everybody, and we too are getting a little itchy-scratchy.
So pull into the rest stop, get out, stretch your legs, and then get back in the car and get a Coke. And get another 2 or 3 hours driving in. That's what we would say to do.
We're looking at it each and every week. You can call us with any questions. We'd be glad to meet with you. We'd be glad to talk with you. We do it because we know it is your money.
And your money matters.
Talk to you next week. Happy Palm Sunday, by the way.